All right, so we're going to talk about what I call my pull trade with the integrated, the break, hook, and go. So a lot of us saw this probably by a couple of days ago. And in fact, a couple of guys asked me, and I was like, dude, I would not touch that with a 10-foot pole as it looked like this right here. In fact, I posted a chart and I was like, I even looked at RSI and a bunch of different things and even seen the volume starting to die off a little bit. I was like, this is just a disaster in the making. So I was like, there's no way I'm going to touch this. And this is what you could see. So I think at the time it was even bearish divergence because of the price action here, and then making one more push and seeing all those rejection candles, right, on a 4-hour time frame. And I literally put the chart away and did not go back to look at it. Personally, I'm not a huge fan of entering something. I want to catch something down here. I want to maybe catch it here. Seeing that zone of demand, taking a shot, putting an entry there and a stop loss somewhere down here, and then hopefully riding another leg up. So, but there's actually a way to trade this as you start to see a little bit more of this move develop. So let me hit the play button and I'll show you. When I spotted this later on, I happened to open it, right? So that's an interesting candle there, right? Quickly, it got absorbed. I believe that's called a pin needle. And here was interesting that I didn't notice till later that I opened the chart. So it actually went ahead and it put a low, and then it put another higher low, and then the price started to hold up there. So you start to sort of consider, if I had seen that, you're like, okay, let's see. And you saw this candle there, and that candle there essentially put a lower low than this one, but this low and this swing high, technically that went to the same or just a little bit higher than that one, and then this one did not break that bottom. So the price is holding there, right? And so I started to see this develop, and actually I saw it right there. So I put a notification, I think I put a notification like, hey, let me know if it breaks the top. Or actually, I think I didn't even, I've just put this trade aside. So here's what's interesting. I'm going to show you something very simple. So this is a high probability trade setup. This would be our pole leading into what creates a flag situation here. And you could just have a flag like that. We could also, sort of create a wedge by grabbing those trend lines, right there. Either way, I prefer that the most effective one is really just measuring there. I guess we could use, that low and that low. So we then copy this and we place it at the high, at the swing low of where that flag went to. And what that does is it gives us a high probability outcome of where this target is going to go. Now, if you run if you run fibs and you measure a bunch of other stuff, you can probably achieve some other targets, go to bigger time frames, see where there's resistance, etc. And so I have another copy here of the chart that I'll show you in a minute. So if we saw that pole be made, that was a 4-hour candle. Right? Now that happened like early morning, 5 a.m. It creates what's called a break, hook, and go. So the very top of this, right? Let me zoom in. The very, very top of this, right? This flag range, and this here, the top and the last high before this, creates a range of interest for what I've read and learned, which is the break, hook, and go, and what I've tested in my own strategies. So we've talked about the setup here, and I guess technically we could also observe a shoulder, a head, and a shoulder, right? Now, if I measure these, let's use fibs, we could have probably, this will probably come to a 236, maybe a little lower. Yeah, lower than that, 9.5. I use that fib because I see it a lot too. Makes you really freak out, and my stop loss would have been down here. Again, I was not really paying attention to this trade. And why it's also important to periodically go back and check your charts and see how the trades develop. So let's just say we saw this breakout here. If we go into smaller time frames, and when I do this, it's going to reset the time clock on here. Well, actually, I'll show you the pull trade here. So the break hook and go here. But this breaks the flag, breaks it. The next candle hooks, and it goes. And it'll continue to do these hooks. Now, sometimes you have to literally go into the 1 minute time frame to see it because it's been a very vertical move. It's extremely bullish, right? But obviously this is high risk. So what I would have done had I seen this here, and another thing to you could do is measure this, and probably gives you a 786 or a 618 fib. Watch where that wick went to will probably give us a 786 or a 618. Now let me zoom in here. Top right there. So swing low to that top. Oh, almost. Sometimes I've seen people, they measure literally the candle. I tend to like to measure from the lowest point. But you have to, it is a little bit of trial and error, and I think it has to do too with how bullish the move is. If it's not incredibly bullish, then this would have probably worked, and sometimes they would have even hooked back to the 618, which is a trade I did on EOS today. But so anyway, you could even put your entry right up here, have a stop loss, right? Now, you're playing with fire, right? Because the stop loss in here to have been safe from entering right there, that's 2.5%. This thing could have retraced and ran your stop till, below the 618. Technically could have even like retraced to the 382 and then kept going. Had it broken this low, it would have sort of invalidated the pattern, right? So anyway, we take a look at that. And then the other thing that I will look at as well, actually no. So let me just show you, so we finish this part. I'm going to hit play, and we're going to finish watching this move. So then the very next candles, look at that. Oh, that's great. It just kept going. So do you see where this took us here? High probability target range of where that could go. In fact, if we really go, if we say, okay, this is the low that it took us, if you really want to get exact, you copy that, right? Let's mark here our low of that flag so that I can match it, and I can say, okay, that is where we're going. High probability target, look at that. It's just magical. Measuring from there, copying that pole, and then duplicating that. So it's just a high probability setup, and this is probably one of the simplest things to trade because you're not getting complex and with crazy fibs and trend lines and some stuff. As you've seen, price action, candles, high probability stuff. So I haven't even pulled up an indicator. If I would have turned on, even like the RSIs is out of whack. Right, but these are bullish candles, right? You could see they're just, this is a bullish move right here. The moving average is incredibly bullish as well, right? Now this is a vertical move right here. You can see the angle changing on this. Now we talk about the break, hook, and go. So you see these candles. So this one broke, hooked back, right? This one went to that, broke a new level. This one hooked back. This one went up when the new candle opened, hooked back. This is what allows money to sort of come in. So if you're watching the 4-hour candles, right, when a new one's going to open up, you could use the same percentage of retracement as you saw there, and know, okay, if this candle reached to this top, I'm going to put an entry there. If this candle reaches this top, I'm going to put an entry there. And so this is the, the chart that I did, I think by like 1,300 hours that I saw this candle. But again, for me, a little too risky, especially with the market. I'm not a huge fan of these. I'll do them in smaller scale, but something like if this is where it started, I would probably trade it. But this was like completely extended. So I had put a target up here. I said, okay, we'll probably get to 10.3, and I even shared it with. Here's a screenshot of me saying that that's where we were going. Give me a second, so you don't think I'm making this up. Today at 1:48 p.m. Right? So we were like somewhere around here, somewhere in there. That's where we're going. And so you would have put an exit there and got an out. Now I want to show you another example here. So the break, hook, and go is that. In this case, the break, the hook, and the go is to the flag. Right? It breaks, it hooks, and it goes. And you'll see that often. So this is a trade that I did on EOS. It started with me seeing the pole, seeing the what is called the flag. Now I adjusted these fibs because of the type of trade that I was in. Normally I would have, where are these fibs at? I would have been measuring from down here for my entry, right? So why did I put my entry? I had my entry right here in this green line, the 382, because I saw the 382 did it held, it got a bounce, and then this one did not put a lower low. So I got my entry. I think when I saw this, I was like, all right, I'm getting in. Or right when this happened, I put my entry and I got it. I was like, all right, I'm comfortable enough, and I'll trade with my stop loss down here. And then what I did to determine the exit, grab the same fibs, grab the swing high to the swing low. 618 is a high probability target. There's also a PSR right here in this zone, which is why I put the red line there, and I didn't want to get greedy. Sometimes I've gone straight 100% to the 618. I mean, look at that freaking perfection. 73.06, right? Boom, the first candle didn't get there, so I put my sell order there, and it went through, and I was happy with that. Now, if you really want to be ballsy, you close your long, and you immediately open a short right there, and then you can snag a quick scalp, but honestly, that's just a little risky. I mean, you could have immediately got an extra 2%, not worth it because it could still continue. And yeah, trailing it with a stop loss is also another opportunity, but this is a 5-minute chart, and I did it just so I could watch the candles and the price action. This will happen in a big scale, and as long as we hold here, EOS could actually continue to do similar to what we just saw in waves: a break, a hook, and a go. If it can break this hook and hold, then we can expect the high probability target's going to be about 200%. And if I copy this pole here and I put it where it goes, it'll at least take me to the 1618 on this setup. So that would be a high probability target. Looking at the big picture, you have to see where there are other PSRs. But if it does complete a cycle in this perspective, then I would actually, no, this is wrong. This would be, sorry, I'm counting those fibs. Those were fibs to be able to get out. So if we do this, then let's just say that it does become a 1, 3, 4, 5, and get up to somewhere up here. So we'll see. But my point in just showing that is that was a perfect pull trade to what I am explaining, and the entries that I even shared on our Discord chat were there and there. Boom, boom, boom. I was able to snag. That was a trade on 10x leverage, 3.8%. Not bad. So I hope this makes sense, guys. The other things to consider as well into this, and when you see something like for a second, let me just turn all of this off. Moving averages down here on a big time frame like that, they're pretty bullish. Right here. Look at that. EOS is just taking a dump. They are pretty bullish. And another important target too, on the same sense, is if we measure from here to here, 618 is a high probability target from the last swing high to the current low. That also happens to match with a PSR, so I would have taken profit there if I'd gotten a long up here, and just been patient, or at least put when it closed above, put a stop loss. And as you can see, let me just delete all this for a second. Remove all drawings. Right, that's 618. When price struggled to get above that. I'm sure if you grab the absolute swing high to the swing low, yeah, even more accurate. So that's flavor. This gives you a higher probability of getting that exit if you're going for a quick impulse move. So we'll see. We'll see if it wants to continue depending on where it closes. If the price on the 4 hour can get underneath the 200 moving average and hold there, to me, that will give us a bullish continuation. And so that's important to consider in that setup, the moving average. I use the 44, the 100 as green, and the 200 is red. I've gotten used to those. When I see something like this on the, this was an inverse head and shoulders here, very bullish one, right? That I think a lot of people missed here. But this was a decent sized move from here to here, 25%. That's a decent sized move. And so whenever you start to see the price get over the moving averages, say on a 1 hour time frame, it's an opportunity to say, okay, let's see if I can spot an inverse head and shoulders and see where I could get in. There's a shoulder, there's a head. This shoulder barely retraced. That was probably, watch, if I measure that, that shoulder probably only got to the 5 fib retracement because it's so bullish. Watch. Look at that. Actually, it did actually swing back to the 382. Barely. I mean, look at that money flow right there. Boom. And then it was gone after that. There is one, in a bigger time frame. I believe if you, you could have, oh, this is a head. And then actually, shoulder, head, shoulder. So, sorry, I worked really late last night charting out a ton of stuff. So if we measure right here, boom, 382, 2 touches, and then it flew. So that would have given us a high probability target there of 200%. And then look, but it was such a bullish move and then closed above it. There also another way to work targets too is work the targets on the way up. So measuring these, I like to consider, so where do I exit? Measure from that swing high to this swing low. And now, okay, they've worked the 236. Got it. They've cleared. Oh shit, they're getting above the 236 now. All right, next target's usually 382. Some coins, when they move slower, they'll touch the 382, retrace a little bit, and then they go for the 618. Sometimes they just skip the 5. And then, of course, some that are very bullish will go all the way to 786. So I take profits at those levels as we're working up. But I integrate PSRs with this, right? So something that's very important is there's some resistance here, and the price got rejected there. So I'm going to say, okay, I've got to look out for those levels. The last time that we created support, there's one area of support there. And when's the last time that so this was support and acted as resistance, so I'm going to be cautious of that. The last support before we made new lows was right there, so I would be cautious of that. And same thing working my way up right here. So this is an area, I mean, all of this is like EOS is going to need a lot of power to get through all of this section here. There's going to be a lot of sell pressure. So we'll see. Otherwise, we're just going to head to go make some new lows. I hope this is helpful.